Ladies and gentlemen, welcome back to my YouTube channel. Another video jam-packed full of information. And I want to ask you guys this. For those that want to learn how to start day trading, options trading, I know it sounds complicated and a little difficult to understand, but don't you just want something that you can just clearly understand what's happening? You can clearly understand the setup and see the patterns. Don't you want something so simple that every time you see it, it can be repeated over and over and over again to make an extra income in the stock market every single day? I know I do. And so, with this simple day trading strategy that I'm going to teach you guys today, it's going to be so simple to visualize exactly what's happening in the markets, how the markets are moving, and how this actual stock is moving for you to position yourself for a great successful trade. Now, I know there's a lot of strategies out there, and I'm sure they all work, but this strategy here itself was the easiest one for me to understand and comprehend. So without further ado, I'm going to show you guys here on this Apple chart. This is a trade that we took this morning with my group chat, and we called it out on the chat, the entries and exits, and it was just a beautiful trade. It was an easy trade to understand, and I'm going to show you guys here exactly how it played out. So this yellow area is the pre-market zone, right? So we want to mark our pre-market highs and our pre-market lows before we do anything else, right? So we mark our pre-market highs, which is here, right? This is a pre-market high. And then we marked our pre-market lows, which is here at this wick. So this is our pre-market high. And this is our pre-market low right here. Okay. So you guys can see clearly where they're at, pre-market high and pre-market low. That's first and foremost, right? So then the next thing we got to do is just really be patient to see which direction the market it wants to take us. We want to either break the pre-market high to the upside or break pre-market low to the downside. This is going to indicate which direction this specific stock wants to go. We don't want to guess where it's going to go. We just want to react and follow that trend, follow that wave, and ride that wave to where the direction of this stock is going. So as we mark our pre-market highs and pre-market lows, we wait for market to open. The first 5-minute candle shows here that we were pumping up, then came back down, and we closed here at the bottom, right? We closed here. Our next candle opened up, kind of did the same thing, went up, went down, and it was just consolidating. A lot of bears, a lot of bulls fighting for the direction of which way they want Apple to go, and we were still inside the pre-market high and pre-market low. If we're inside this pre-market high and pre-market low, we don't trade it. We don't want to be trading in the zone. This is what is called trading in the zone. As you can see here with the drawing that I'm creating, this is trading in the zone. We don't want to trade in the zone. We want it to either pump up, break above the pre-market high, retest the pre-market high or the EMAs or the VWAPs, and then continue the trend to the upside. Or we want to see this break under pre-market lows, come back to retest the pre-market lows, the VWAPs or the 9 EMAs, and continue the trade to the downside. But if you can see that this is just trading in the zone, you simply do nothing. You don't do a damn thing and try to guess where it's going to go, because that's going to result in you losing your money. The most important thing we want to do is protect our capital. And so we just wait patiently to see what's going to happen. Well, in this case with Apple, I saw that we finally had a massive candle here to the upside. We got a nice 5-minute close to the upside right here. And then the next 5-minute candle comes down to retest. As you can see here, we have a wick right there. In this area is where we want to enter our position. The EMAs are catching up, the VWAPs are catching up. So as you can see, we got a pullback, we got a nice little wick here, and that is where we enter our position. Now, this is what it looks like for our targets. We are looking at our psychological levels, right? So here to the right, we can see that we have our psychological levels, right? We have 237, we have 237.50, we have 238, and so forth, right? So we ripped up with a 5-minute close above pre-market high. We are really interested in this trade now. We are looking for a small pullback, possibly to the pre-market high or to the EMA or the VWAPs. And as you can see, we got a nice little pullback, and that is where we enter position right there. That is our entry. So we'll mark it there. That is our entry. Now, where should our stop loss be? Now, we identify the stop loss as short as possible. We want our stop loss to be as minimal as possible. We can either get it all the way down back into the zone, into the pre-market high zone, or as soon as it breaks and has a candle close below the EMAs. So let's say we enter position here, right? Let's say we enter position there, and it decided to just drop. It decided to drop and it came down like this. We are now below pre-market. Well, we are now below the 9 EMA and the VWAP. That is an indication of your stop loss. So how would this look like? With our indicator, we entered here and our stop loss would be like that, right? Our target would be the 240 psychological level, which is up here, right? So that's a 1 to 2 risk to reward. Now, in this case, we did not get a candle to the downside. We just got it to rip and we got the gains, right? So we targeted the $240 psychological level here to the right, and we took our profits. This was a perfect entry, the perfect setup with the perfect amount of volume being traded on Apple stock. We entered our position here on the wick, and we put our stop loss below that EMA and the VWAP. Our targets were up to 240, and that's where we took our last contract. We did trim here at the high of this candle for about 20%, and our last contract ran up to about 40%. We could have held it longer, held some more runners, because this play ran up to like 50, almost 60%. So it went up all the way to here, but we didn't get greedy. We hit our levels and we took profits accordingly. And that's really all you need every single morning in order to make an extra income. Now, if I don't see this setup, I do not trade it. If I just see consolidation in the zone like this, right, I don't trade it. This is trading in the zone. You simply do nothing. You always have to wait for a break above pre-market high or a break below pre-market low. And to show you guys that this strategy is actually working, like literally almost every day, I can show you guys another setup. Look at this one here. We can have one right here. This one, actually, you would have probably took a loss because the entry would have been right here. Entry would have been right here, right? But it broke back into the zone, right? We mark our pre-market highs right here, like this. And then we mark our pre-market lows, which is right here, right? So technically, anything in between this is trading in the zone, right? This is in the zone. So if we would have entered off of this 5-minute rip, we received the red pullback here. We entered position here. I'm sure it was wicking. and it closed below the pre-market high, then we are out of position. This is how it would look like with our stop loss. So we would enter here at the retest, and this would be our stop loss right there. Boom. And then our targets would be to the psychological levels of 233 and so forth, right? But in this case, that would have stopped us out. Now, you can see that we climbed back up pre-market highs, right? Here, we closed back above pre-market highs. We can literally re-enter our position here and start here at this wick and put our stop loss again below pre-market high, and then targeting again our 233 psychological levels, which will give us a clear 1 to 3.7. That would have been a super beautiful trade because we are again back above pre-market highs, right? So as you can see that as long as we get above pre-market high or below pre-market low, it'll start trending its way up, or it'll start trending its way down. If we keep moving left, remove this. We remove this. You can see here that this is our pre-market high here. You can see that we were bouncing off of that pre-market high zone. Here, we closed under it. We would take a small loss. We closed here under pre-market high. We would take that small loss and we would enter here at the pre-market retest. These are all retests right here, pre-market high retest. These are all retests. So you would technically scalp from here to here. These are all scalps. Nice profits. You would enter here and get out here. You would enter here and get out here. Obviously, we would target our psychological level all the way up here. This is where we actually want to take our profits, which it actually came up and hit. Look at all these. These are all profit targets that we can possibly take. Now, this would be our stop loss here, but once we got back above pre-market highs right there, we enter position. We are back above pre-market highs. We are above EMAs, and we take our trade to the upside and we run it up. We keep going to the left. Now, this one right here is an example of a short position, meaning puts to the downside. I'm not looking for any other setup besides a break of pre-market high or pre-market low. So we mark our pre-market highs here, right? Then we mark our pre-market lows here, right? Look how clear this is set up. We break down under, we close under pre-market low, right? We close under it. This here gave us a nice little retest right there, and it continued to the downside. So this is how this trade would look. You get the short position, we enter here. Our stop loss would be a close back above, and then we ride it to the psychological level of 230. Boom, right there. That's a clear 1 to 3.5 risk to reward. And if you have runners and you want to continue holding, this trade literally gave us a 1 to 9, 1 to 10, literally all the way down to here, right there. This was a clear 1 to 10. But again, it's super simple. I'm sure you guys can see exactly what's happening here. We are not guessing. We are just reacting to following this specific trend, whether it's trending to the upside or it's trending to the downside. And this is exactly what happened. We caught a nice 1 to 3.5 down to psychological level here, right? We enter on the retest and we took a dump to the downside, right? Let's say you missed this entry here. You missed that entry. The psychological level is here at 230. We are under it. We came to retest the 9 EMA and rejected, and we continued to the downside. So this would be another entry here on the little pullback, and we will write it down. again. So it'd be here, and we would write it down, and the stop loss would be above that to have a nice short stop loss and get our profits. It doesn't get clearer than that. We're just riding the trend to the downside because it's trending down, looking exactly like this. Literally, it's doing this, trending to the downside. So we don't want to go short at the bottom of these trends. We want to get it on a pullback, like here, like here, like here. We want to get those pullbacks and enter our position for the next leg down. And so this is the stupid simple day trading strategy that I look for every single morning in order for me to make an extra income in the stock market. Again, there's a lot of strategies out there that I can show you guys, but this one is the easiest one to really understand and comprehend what you're looking at, the patterns that you want to find, and it's just super easy for you to understand. And so we can even go to another stock. Let's go to MSTR, right? MSTR. Look at this trade right here. MSTR, boom. Now we mark our pre-market highs, right? Mark our 5-minute pre-market high all the way here. Right, we just drag it across, and then we mark our pre-market low. Right, so it's right here. This is our pre-market high and our pre-market low. Right, we are waiting for a 5-minute close above pre-market high or pre-market low. So what happens here? We are in the zone, right? We are still in the zone as market opens. We pump up, we come down, we are still in the zone, and then finally we break through, right? We finally break through, and we come back to test the VWAP and the 9 EMA. Well, the 9 EMA is right there. So our position, how do we enter? We enter shorts to the downside right here. And how does that look like for a stop loss and take profit? You would enter at that retest. Let's say you enter here, you put it back above pre-market lows. That will be your stop loss, and you write it down minimum 1 to 2. 1 to 2 would be right here. That would be a 1 to 2 risk to reward. Now, if you continue holding, this trade would give you a 1 to 4.5. A 1 to 4.5. Beautiful trade, beautiful setup. This is the setup that I look for every single morning. And it's like you can literally find it in any stock. As long as it positions itself and it presents itself, that's the trade you take. If it doesn't give you that, if it doesn't give you this specific strategy, this specific setup, I don't trade it. Let's go to Microsoft. Man, Microsoft had a rip. Well, here we go. You can see here, we got above pre-market high, which is here, right? And then it came back down, right? You would enter here. This would be a loss, right? Because you would see that it broke above pre-market high. You would enter here at this wick. You would be up in profit, but I mean, you obviously want to keep riding it up. So this would stop us out because it closed back under right here, back under pre-market high. So that would be a super simple stop loss. And then guess what happened? We got back above pre-market high here at this green one. We came to retest on the wick. Our entry is there, and then we ride it up. So how does that look like? Looks like this. Stop loss back under pre-market highs, and we ride this up, and it gave us a risk to reward of 1 to 8. Super clean trade once we got back above pre-market highs. Continue left. Look at this. This would be the zone, right? We got pre-market high, right? We mark it across, right? And then we mark our pre-market lows all the way down in here. So it's our pre-market low, right? Literally, this is a huge zone, right? This whole zone right here would be all this. All this. This is pre-market highs and pre-market lows. This is the zone you don't want to trade, right? We want to wait for a break above or a break below pre-market low. So as you can see here, we broke above pre-market high. And what happened? We came back to retest. Look at this. Retest right here. This is our entry. And then we ride the stock up. So how would that look like? We enter our position here. Stop loss below pre-market high, and we ride it up for a nice 1 to 4, 1 to 5 risk to reward. So as you guys can see, the strategy is real simple and it presents itself almost everywhere. Will it work 100%? There's not one strategy out there in the world that works 100%. But this is at least a 70%, 80% strategy that hits almost every time, 70, 80% of the time. So without further ado, I'm going to end this video. I wanted to show you guys how clearly this strategy is, how clearly it works. And I hope you guys learned something. Hope you guys learned how to see the setup, how to visualize and look for this specific setup so you guys can know when to enter and execute the trade. So if you guys can help me out and hit the like button, hit the subscribe button, I would really appreciate it. This is all love, and I hope you guys learn something and continue to learn and fall in love with this skill, fall in love with trading, with investing, and just learn to build wealth for your family, for yourself, your kids. Like, this is something that no one can take away from you. You know what I mean? And back in 2020, that's just what happened. 2020 was a year where my barbershop shut down for 6-7 months and I had no work. I literally had to cut hair low key at my house. I was doing house calls and garages, and I still had to pay the bills. I still had to pay my barbershop rent, even though we were shut down. I couldn't believe what was happening. And so I had to learn a new skill set. And trading was the one that I was like, yo, this can't nobody take this skill away from me. I'm going to learn this skill, and literally you could do it off your phone, off your laptop. As long as you have internet, as long as you have a phone, you're able to trade anywhere in the world. And nobody can take this away from you. So thank you guys for watching. I appreciate you guys. Relentless Barber University. Let's get it, man. You know what it is.